I use it when I'm trading smaller stocks. I use it when I'm trading less liquid futures products. That tends to be how I use Icebergs. It works really well for those situations. And it basically allows you to not have as much of an impact on the order book. Because what you don't want to do if you're trying to move product and you're not as worried about when it moves is what price you get. You're trying to make sure the order book doesn't run away from your bid or ask. So you don't have to sit there and, if you're in a rush, people might cross the spread. They might do other things that give them slippage and less advantageous execution. So that's the way that these icebergs work. You can see that because we have the MBO data package, and that helps us to identify both icebergs and stops. And I do tune my icebergs a little bit. So when you're looking at the way that I have my icebergs on chart, you're going to notice I'm not showing every single order. I'm only showing those that over a 90-minute interval achieve a 10 standard deviation multiplier. And then I'm reducing some of the icons and data shown on screen just to simplify it. And then I'm also color coding those icebergs. And the reason I do all that is for me, it just makes it easier for me to see what I need to see on screen. Another thing you'll notice is you have these labels on the top and bottom right. 14,000 on top. This is the number of cumulative offers on screen and off, and 17,000 on the bottom. That's the number of cumulative bids on screen and off, with a difference of 3.2 thousand. This is another add-on. It's called Outside Liquidity, and this is how I configure it. Show liquidity and the difference and include the visible price levels, because what I'm really doing with this is getting a sense as to which side of the order book is a little bit more heavy, if there is that difference. If it gets big enough, 30, 40, 50% of a difference, then you can see that one side might gain an advantage. And you can also see here we're seeing a little bit of a turnaround off those lows. This is a stop indicator, 32 on the stop side. That means 32 contracts that were sold short were stopped out on this move higher. So those are effectively market orders that are risk limits being executed. Again, you can see that in the MBO data package. And as we made the crest of that move higher, you can also see that there was a pretty aggressive buy delta. You can see it there. You can also see it in the delta volume bars there. And this is a market that's going to have some work to do this morning to get above some of these important levels and more or less prove itself. Again, on the S&P 500 September contract, 63.9150 is going to be a pretty important level to watch. But just below that, we have some options-derived levels to watch as well. These key levels are based on call positioning. Really, we analyze the entire options chain of the S&P 500 and then derive levels based on where there's positioning and how it may affect price. These could be minor resistance levels, but if we get above them, it becomes more bullish because you have changes to the dealer hedging dynamics that would compel them to want to buy more. So we're going to watch these as potential resistance, knowing full well if we're able to pull above, that could be constructive for price discovery. You can also see some confluence with key 3 and this 342 offer just overhead. And we're just about 9 minutes away from the market open here. Important to note, we do have some data coming out this morning. We've got U.S. S&P Services PMI final and US S&P Composite PMI final at 1/4 of 10. And then at 10, ISM Services PMI, we're going to be watching that headline figure, which is forecast to come in at 51.5, as well as prices paid. And this is a really important level to watch because we can see there's some potential for pass-through inflation or margin compression as the prices paid level has been elevated for many readings. The forecast is for 66.5. And we'll also get a reading on ISM Services employment, which has been in contraction for several months. And then later, we have the 3-year note auction at 1 p.m. So for today, we'll be closely watching that ISM Services PMI print. And I think that's going to be, if it is a deviation print, that is to say, if it's a strong enough deviation away from expectations, that could be a bit of a decision for how we trend, at least in the morning session. And I've got a question from Ship's teacher. With an aggressive buy delta, does that mean it will go up? I feel like each time I take a trade long, when I see the big green dot, the market reverses. So that's a great question. I would not lean into using that as a sole decision maker for whether or not you want to get long on something like this. Personally, I think that there's probably a number of other ways to look at it. I still look at the delta bubbles as just a sign of aggression, not necessarily trend in isolation. I much more look at the overall price structure and trend, the options flow and positioning, and then I like to look at what some of the desks are doing. I like to look at where the bids and offers are. Like, for example, right now, we've got that relatively large offer at 63.66. If we're subscribing to auction theory, we would want to see an excess of demand take us through that supply with some continuation. That would give me the sense that we have room higher. So the bubbles are helpful, but if you see a really big bubble, sometimes that means one side is getting maybe a little bit too aggressive, and that could be why you're seeing those reversals there. I really favor looking at the options flow. The hot call, for example, has been really invaluable for finding where price is likely to go on days where calls are trading in excess of puts on those top 2 strikes by 40% or more. On the other side of it, on the rare occasion where puts are in favor, that hot put can also be really helpful for finding that lower price target. And I don't get too cute. I don't try to put my price in right at that level. I'll usually do a handle or two below. Because if we get up there and we reject, or we get down to the hot put and we reject, it's much more likely I'm going to get my fill if I'm not right exactly at that strike. And I'm willing to take that small discount for the premium of being able to trade a little more flexibly and with the idea that I'm more likely to get that fill. So I really like to watch the options volume in SPX to determine where ES is going to go. SPX trades about 1.25 trillion in notional on a daily basis. So that's something to take into consideration. Because 1.25 trillion in notional for a single options product is more than all the notional of all the US equity index futures contracts combined. Options really do pull the S&P 500 around. And so SPX is very noteworthy if you're trading ES. And then for NQ, it's worth watching the NDX options, but even more the triple Qs. They can give you a pretty good sense because they're incredibly influential and liquid. But again, nothing compares to SPX and the influence it has on ES, because ES is one of the preferred delta hedging instruments for market makers. So if you're making a market in SPX options, you've got to be able to hedge out that options exposure. For example, if I sell you a call, I don't want to be on the hook to pay that call off out of my own pocket. So what do I have to do? I have to hedge out that delta, whatever the value of that call is, by buying futures in the S&P 500. And in doing so, then if those futures appreciate in value and so do the call, I have the cash to pay that out to you. So if you look at the SPX options visualizer, it actually watches the dailies, the weeklies, all of the options in the S&P 500 chain. And I have some algorithmic reweighting that prioritizes them in a number of different ways, a little bit of special sauce, you could say. But in essence, this is going through about 10,000 different contracts across all expiries and strikes to try to give us more information about what might be actionable during the trading day. And it can plug right into Bookmap or MotiveWave. But that's one of the ways that I get a little bit of an extra edge when trading this market, because the options flow tends to pull around the futures contract. And I wouldn't say it happens every single day, because there are certainly outlier days where the underlying flow outpaces the options, or there's some kind of event that isn't priced in. But I'd say most days it can be very helpful. And I'm asked if I watch gold. So gold options, sure, there are gold options contracts. They're not nearly as liquid as SPX, but you can look at things like GLD. And actually, I do have options visualizers in the works for all of those contracts, the popular ETFs and stocks and a number of other things. We just released SPY, Triple Q, and NDX and IWM, but I'm working on a more complete package, and then I'm going to make those data streams available for subscription if people want to add them into their Bookmap or MotiveWave. And I'll also be looking at adding them to other charting platforms like TrendSpider. So keep keep in touch. Look out for some of these new announcements as I work on these products. Really exciting stuff that's going on. I'm trying to make sure I get everything bang on. So we're doing some beta testing, making sure it all works. It's all the beta stuff is available on the TradeRate Discord for, we've got SPX obviously, but we've also got NDX, Triple Q, SPY, IWM, and a number of other products on there. And then gamma visualizations for any optionable product on CBOE that you can query with our bot as well. So it's kind of cool, all the stuff we have going on there. And folks, if you have any questions out there, feel free to pop them in the chat. Always happy to help. We're just about 1 minute away from market open. And that offer was registering for a minute at 666. That's ominous. But it has come down to 653 now, we can see. So and after the market closes, we get earnings from AMD, which also will be really interesting. That stock has been on fire. That was one of our swing trades from the June navigating the market, still long and still confident. I mean, this is a company that is really turning itself around. They're executing so well in the data center space and also just in CPUs. They have become the dominant player in CPUs, laptops, desktops, servers. So really kind of nice to see this company coming into its own after being distracted with a lot of unnecessary acquisitions. They've finally, I think, gotten their footing. Markets are open here. Looks like we're probably going to have a bit of a volatile start. You can see volume starting to come in. Some Iceberg selling 200 on top there just by that offer, which is now 663. I'm going to zoom in just a little bit here. And that clean rejection at the offer is not really something you want to see. I'll give it a slight pass because it's the very beginning of the trading day. But if we get back up there and reject again, that is a pretty bearish sign. Overall, though, you can see the market's already not particularly thrilled with that rejection up there. Down about 8 handles, 7 handles since. And if you subscribe to Auction Theory, it's very simple. that, you know, at least at that moment, buyers didn't feel they had the demand to take us through that supply. So the natural course was to have a bit of a move lower. Sorry about that, folks. And we are seeing just a bit of a continuation on that pull. Now we're going to watch that call wall below as a potential level of support. We certainly saw a lot of interest there and at the most active call strike yesterday. And we're going to be watching this offer overhead, which has already acted as resistance for now. A break above it would be a quite a bullish thing to see in today's tape. Just in the morning action here. And I'm just going to pull over this other window I have my dynamic pivots on. So just below the call wall, the intraday pivot that is worth watching is 6354.25. That is another decision level. It's algorithmically derived. These are updated as the market changes, price action, volume, and other considerations are made. But that would be the next level I'd watch. So there's a bit of confluence between this call wall and the 6354.25 pivot. So Ships asks, the SPX options visualizer you created an extra paid add-on for Bookmap. That's correct. It's a data feed. You can learn more about it at traderaid.com/SPX. That's traderaid.com/SPX. And it basically pulls in this data into Cloud Notes that you can see in the rightmost column. It derives both options positioning and then flow. So this is yesterday's flow. It'll be updated as we start to get today's flow in. But I keep yesterday's flow available until we get the current day's flow because it's still levels where we've seen significant interest in particular prices, and that could be valuable information overnight and in the early part of the regular trading hours session. So this is a tool I've been building for several years, and now I'm expanding it out to other products. It's SPX centric, but it can work on any optionable index, ETF, or stock. So you're going to start seeing options visualizer capabilities for a number of different products and on other charting platforms as well. Now, I've been asked, have I heard of Top Step? I have heard of Top Step. Do they have Bookmap? That is a question that is above my pay grade. And I have to admit here, I have never traded with a prop firm. So it doesn't mean there's anything wrong with it. If you're able to navigate the rules they put in place, if you feel confident that you're not just going to be another one of the people that has their cash turned into someone else's payout, which is the whole business model, really. Like whatever they don't pay out to other traders, they get to keep. If you're really confident that you can navigate through the sort of Kafka-esque maze of rules that can be ever changing, at least from what I've seen, then you may be able to succeed at this prop stuff. I personally trade my own capital, so I don't really have any familiarity with what these firms offer or don't offer. So I'm sorry I'm not able to help you with that. You might want to reach out to them directly. An overall somewhat heavy start to the day. Now we're consolidating. Kind of funny to see that 54 stop out. Like this was the low and then a short stopped out right here. I guess they were very sensitive to an upward move of price. And you can see this red line up above. That's the highest price level during regular trading hours, right below that big offer zone. Looks like we're going to maybe kind of coil up the spring and make another go at that offer. I do not want to see it get rejected again. I think that would be a pretty bearish look. On the other hand, if we can see buyers absorb that offer and continue higher, we've likely got some momentum to make a push into some of these other offers overhead, which you can see have some confluence with these key levels as well. That's not a coincidence. That has to do with the structure of how this market is made by dealers. You're very welcome. Great questions. And looks like we're going to make that second challenge to the offer zone here. Let's see if buyers can take this out. So far, seeing a little bit of trepidation here. A rejection would have me wanting to fade that move, looking for a new low happening on the day. I'd probably be looking for us to come down to this bid, but it looks like they're taking it out. So this is good. This is constructive. And I'd be looking for longs here up to these next offer zones. Because you saw with that aggressive delta, but more importantly, what was taken out with it, that buyers are taking control of the price action here, making a new session high. Now, because we have event data coming out, ISM services PMI at 10 a.m., I wouldn't want to have positions on for too long here, but taking a little nibble on a long and trying to get maybe half the position up to 63.75 and the other half up to 63.80 wouldn't be the worst trade. And then looking to close out everything before 10 a.m. because ISM services PMI, if it is an outlier print, can certainly change the conversation. And look at this. We have a big 1,000 offer just coming in overhead. So that changes the script a little bit here. And you can see buyers retreating from it. So I'd no longer be interested in those longs based on how price is reacting here. Once again, we have to push through that larger offer. That is, even for the S&P 500, that is a pretty large offer. And you can see there's a little bit of an excess on the bid side versus the offer side, 18,000 versus 15,000 with a delta of 3.7 thousand. So buyers overall showing up in force, but not by a large majority. So you can see price just consolidating around that larger offer overhead. Again, buyers trying to determine whether or not they have the demand to take the price through an even more formidable area of supply overhead. It does look like they're regrouping and they're going to make that effort. But you could see as soon as it appeared, the moment it appeared, buyers lost their mojo. It's like a little bit scary. And we're talking about the iceberg orders before and how I'd structure them not to influence price. There's the flip side of that conversation. What if you do want to influence price? What if you want to, if you have enough size to move around, you want to discourage buying? Well, doing something like this is exactly how you can accomplish that. Show a lot of size right as buyers are trying to make a move, and they may retreat. And they are. This is why, as soon as that popped up, I immediately lost interest in being long, because this is a pretty big test for the resolve of buyers. And often when you see an offer that large, it takes a little bit more thinking and consolidation before they regroup and try to make a run towards it. And then we get that real reaction. Is it the visceral runaway hard rejection, or is it the we're going to push through with a lot of volume? We'll see. Doesn't have to be either binary extreme, but it often ends up one way or the other. Let's take a look at the NASDAQ here as well. You can see the NDX options visualizer on screen. And again, this one is in beta. Looking for it to come out in the next month or so. NASDAQ's looking a lot more sprightly than the S&P 500. I've got to say, it's pushing towards session highs here. And for the NASDAQ, 301 is a big offer. Just disappeared off the book, by the way. But just to note, and that 359, this is a somewhat smaller order book. And by somewhat, I mean a lot. You can see that based on the total offers and total bids versus ES. So while ES is kind of chopping sideways here, you can see buyers are becoming more aggressive here on the NASDAQ, pushing it to new session highs, scaring that offer away, presumably, because it just disappeared. It wasn't absorbed. So we'll keep an eye, but so far it looks like NASDAQ is going to try to lead. And then just to show, we've also got that same options visualizer for triple Q, for SPY, for IWM, all that loaded up here. You can see with triple Q, it's trying to push above its respective call wall and into positive gamma on the triple Q options chain here. So that is constructive to see. Looks like we're building some acceptance above there. And on SPY, kind of a similar look, although again, not as robust as triple Q. There's a call wall here. It is attempting to make a break above it, unlike triple Q, where it's already above it and building some acceptance here. We do have a minor data print coming out in 10 seconds. We're going to switch back to the S&P futures contract. This is going to be U.S. S&P Services PMI final with an expectation of 55.2. It comes in at 55.7. That's 55.7 versus a forecast of 55.2. Pretty much a non-event. And we see S&P futures pulling up, making a new session high and looking like they want to challenge that. There it goes. That 1,000 was pulled, gone. Little bit spoofy when you put out a big offer that you don't have any intent of having it get filled, and it doesn't look like it moved anywhere else on the order book. So that's a little sketchy. It's a little sketchy. It's good to see for those who are looking for longs here to see that that implied supply being removed. But you also know there's someone who could at any moment flash that back on the order book with the intent of trying to discourage buyers because, again, that order was never filled. But I would be looking at things a little more constructively here. We've got about 13 minutes till we get the next data print, which is ISM Services PMI. And we're starting to see some of the options flow for today coming in. Moderately more interest in puts than calls on ES. Let's take a look at the NASDAQ, see if we've got any trades there yet. Just a very small amount, and again, modestly more interest in puts than calls on NQ or the NDX options for it. We've also got SPY options flow coming through. Similar look, modestly more interest in puts than calls. Probably some pre-event hedging going on here. And then similarly, triple Q. Modestly more interest in puts than calls. And then finally, we've got the small cap index, the Russell, and certainly a similar look there as well. But what is noteworthy is we're seeing all of these indices really grinding to new session highs here. And guess who's back? Mr. 1000 lot right overhead. Looks like about 1616 on offer there. So as the price stair steps higher, you've got another supply zone to grind through unless he just sort of pulls it once again. But it is nice to see overall the price action that we've experienced where we got some support right around that call wall level and made a bounce. Can also see the midpoint coming on screen now. What that tells you is that options flow right now is balancing out between puts and calls at the volume between the two most active strikes about within 20% of each other. That offer overhead thinning out just a little bit here. And overall, like I said, when that offer vanished, I was looking at things a little more constructive. Now that it's back and we're seeing price run away from it, I'm a little bit more concerned. Really would like to see buyers make a determined push right through there with some aggression. That's when I like to see the larger delta bubbles for what it's worth. I like to see that aggression when one side is showing that they can dominate the auction. It's more meaningful in that context. So ships, thinking of you in that as well. I know you were looking at just the delta bubbles in isolation. Think about the context of where you're seeing them. If they're larger because one side is taking out the other side in the order book, that's where I think it has a little bit more informational value. You're welcome. And this is one of the things about Bookmap that really is extremely helpful. The way the visualizations don't just show you where there's offers and bids at present and use color to illustrate the size or the relative size. but also where they were and how that affected price. That historic look back is really quite valuable for me. Because you can see how you can contextualize the auction based on these offers. 676 buyers said, you know, we're going to think about it. We're going to reject it at first, then we're going to build up our momentum and we're going to push through it. But 1,000, that's a bridge too far. So as soon as that was put up, buyers were like, we're going to kind of just sort of think about things below there. And then as soon as it was pulled, buyers started to get a little bit more confident. And then as soon as a new offer came on that was of similar size, they ran away again. So that historic look back is pretty darn helpful. Gives me a sense that buyers, while they're enjoying a bit of an edge, they're not very confident in their ability to take out that supply. That's the character I'm reading into the tapes so far. PMI may change that. That data point coming up in about 7.5 minutes. And let's take a look at things just through a slightly different lens here. So we can see also price starting to climb above the big green line. That is a 21 EMA on a 5-minute time frame. Why is that important? Because it's a really helpful intraday indicator. Everyone can easily pop this on your chart. But when you climb above the BGL, you're more likely to get some upward continuation. Just like when you break below it, as we did here, you're more likely to get some downward continuation. And we are balancing out around this midpoint level as well. This is a level to watch because this is the average price between the top two and bottom two most active strikes, the calls and the puts. And when their flow is balanced, the midpoint tends to be somewhat magnetic. So worth noting. And we can see now there's someone else putting in an offer overhead. One of these 600 and some offers, around 667, 668 right now. So it does have, the order book has that feel. It's heavy with supply right near price. And that is causing buyers to be a bit more timid. And some folks might be asking, but why are you scalping this like a degenerate and trying to get every single up? And I don't trade like that. And I'm just making light. But I don't trade like that. I look for the bigger opportunities, whether it's intraday or swing, rather than just churning both my account and my mental capital. So I haven't seen anything super attractive yet. There were a couple setups I almost took, but then we had these offers come in overhead and kind of put the kibosh on the idea that that was going to have continuation. And again, offer pulled. Actually, this time it rolled higher. So instead of just being a pure spoof, they do seem to be interested, at least for now, in selling at a slightly higher price. And we're just about 5 minutes away from ISM Services PMI. Forecast of 51.5 on the headline and 66.5 for prices paid, which is going to be a key metric to watch. Let's just take a look at some of the options flow ahead of that print. We've got, again, the chain is just a little bit more put heavy, not by much, but it's about 8,000 to 10,000 top two strikes and calls versus puts right now. I think some of that is pre-event hedging, which means if the data doesn't come out on a bad deviation, that we could get a bit of a rally from that. As those hedges are taken off, that's liquidity positive. Now, for me, I want to see prices paid come down, and I want to see the services PMI headline number come up versus what the expectations are. So I'd like to see services PMI come in at 54 or higher and prices paid come in at 60 or lower, then I think we could have some juicy upward continuation from this event volatility catalyst, giving us some solid data. That would be telling us the inflation risk is coming down and the overall services industry is doing better. Let's take a look at triple Q for the NASDAQ flow. And we can get a sense here that it's actually a little bit of a different picture so far on triple Q, more weighted towards calls than puts overall. So on the tech side of things, a little bit more optimistic, and we can see that with the way triple Q has been trading as well. Really has been a more constructive trader than ES or SPY this morning so far. Let's take a look at SPY. SPY also seeing more excess on the call side than the put side. So it seems like SPY and triple Q more optimistic here, and there's more retail flows in those vehicles. So, you know, us home gamers looking for higher prices, whereas ES is just a little bit more conservative ahead of this print. And we can see that with the way the puts are looking at much lower levels. And again, I feel it's hedging flow, and the options volume is starting to balance out between the two most active call and put strikes here. 2.5 minutes until data. And just a choppy trading session as this market consolidates more than anything else. Bit of an upward bias in ES, but overall just consolidating. Bit of a continuation from the overnight session. I mean, here we're zooming this out to 6 a.m. Can zoom it all the way out to last night and just been consolidating in a pretty narrow range. So again, that tells me we're loading up the spring, and the longer it consolidates, the bigger the resolution will be. Did see a bit of a stop run here as well. 95 contracts stopped out. Those were market sell orders from longs. And it's interesting because you're starting to see a little bit of a divergence. Icebergs nibbling to get long, stops kicking longs out. If that becomes more pronounced, that tends to be the makings of a bullish reversal. We're not there yet, but what we are seeing right ahead of data, it's about a minute and a half out, the order book is lightening up. You see how much darker it's gotten right near price? This is why you really do want to be careful trading into events. You're not going to get the same quality of price discovery. Whether you're trying to realize a gain or stop out or whatever, the risk of slippage is higher into these events. And just on a BGL note, we did slip below that big green line as well here. Haven't had a closing candle below it yet, but we have slipped below it in this current 5-minute candle that's about to close in 28 seconds. That is imminent. That was not a good print at all. 50.1 on the headline. Prices paid 69.9. So headline number worse than expected. Prices paid higher than expected. None of that's that great. And then the employment number also pretty weak. So I can see why we'd have a negative market reaction to that. 508 contracts stopped out. Buyers getting stopped out as the price of ES makes new session lows here on that move. Overall, this was a nasty data print. Not what you want to see if you're looking for, you know, a more upbeat take on the economy, but overall also just not constructive for the way this market's been trading, because what you don't want to see are signs of stagflation. And I'm not saying we're going into some stagflationary spiral, But this data print is a bit stagflationary overall. Higher prices, jobs being lost, orders flattening out. So that is a nasty print. The dollar index fell pretty harsh on that. We also saw the reaction in futures. And we did test that lower pivot. You can see that here. We tested that 6354.25 pivot. Looks like we're set to test it again. And this is some of the most aggressive sell side delta volume that we've had all session. So sellers are starting to show some more aggression here as they make that push on a pretty nasty data print. So I just wanted to stay on for a few minutes longer after my cutoff at 10 to show you guys what the reaction would be and to watch this print together. As always, it's a lot of fun to be on with you. If you'd like to grab Bookmap at a 40% discount, check out traderaid.com/bookmap. If you'd like to check out the SPX options visualizer, visit traderaid.com/SPX. If you'd like to learn more about what we do at TraderAid, some of our cutting edge trading tools and our awesome community, visit traderaid.com. I'll be back tonight for AMD earnings and next week for next week's episode of Back to the Futures with me, Markets and Mayhem. Thank you all for tuning in. I'll catch you soon.